The Bank of Japan has hiked rates for the first time in 17 years, ending a 7-year-long negative interest rate regime. Hello and welcome back to our channel. My name is Daniela. In today's video, we are going to be doing a quick review of the Bank of Japan meeting, where we did see that wholly anticipated interest rate hike from the central bank. But before we get into it, please like this video, comment and subscribe. And as always, leave your comments and questions in the comment section down below, and we'll try and get back to you as quickly as possible. So as I was saying, the Bank of Japan hiking rates for the first time in 17 years, ending that 7-year-long negative rate regime. Now, the central bank had hinted as such in the days prior to the meeting. So the reaction that we saw in the market necessarily not as big as maybe many would have anticipated, given it was such a big deal. There had been speculation about the bank ending negative rates for a few months now, but no official confirmation had come as such. And we did see some officials commenting earlier in the week the possibility of ending negative rates. So, as I said, highly expected from the Bank of Japan, and markets had already priced in some of that prior to the meeting. So we didn't see a whole lot of momentum. And in fact, we've actually seen the dollar yen trading in the opposite direction to what many would have anticipated. We've seen dollar yen strengthen, hitting that very significant 150 mark, which we know is the area where Japanese government officials in the past have hinted at, or maybe, well, not even hinted, have said that there could be policy intervention to keep the yen from depreciating. So we'll look at the chart in just a second and comment the momentum that we've seen. But in terms of the central bank meeting, as I said, ending the negative rate regime, so going from minus 0.1 to 0%. But that's not the only thing they did. They also ended yield curve control, which essentially involved intervention to ensure that the yield on 10-year government bonds remained below 1%. Interestingly enough, the yield on the 10% government bond actually fell after the meeting. But a lot of that coming from the fact that even though the bank decided to hike rates and end this yield curve control policy, we did see Governor Ueda actually give a lot of a dovish inclination to this hike, saying that, he's not confident yet about the stability of the Japanese economy and that accommodative monetary policy will remain for the time being. So essentially it gives this feeling of a one and done situation where we're only going to see one rate hike and everything is going to remain the same from here on out. So that did give a bit of a dovish inclination. It's also the realization that even though the Bank of Japan has finally hiked rates and ending negative rates, it's still the lowest of the central banks out there. It's still at 0% when most other central banks are above 4%, even 5% for the Fed, the Bank of England. So in terms of carry trades, the Bank of Japan is still much more undervalued when it comes to those rate differentials. If we're looking at the yield differentials between US and Japanese bonds, they remain very wide, and therefore that's favoring the US dollar over the Japanese yen. So as I said, we haven't quite seen that bullish reaction in the yen because there's been a lot of focus on, okay, we have been anticipating this for a while. What's next? And it seems like what's next is more dovishness. And that's kind of what's weighed on the Japanese yen, and also the lack of surprise, because I said they'd already mentioned that they were likely to hike rates at this meeting. There's also a lot of focus, of course, on the Federal Reserve meeting later this evening, but there has been a lot of dollar buying on the back of that, given that inflation readings have come in hotter than expected. So for now, it looks like dollar yen is heading higher. So let's jump onto the chart to see what we could expect. So here we have dollar yen, Capital.com by trading view. And as you can see here, that strong bullish momentum that we've seen in the pair in dollar yen. You can see here after the meeting from the Bank of Japan, we saw dollar really taking hold of this higher momentum, ending the session about 1.1% higher. Even today, prior to this Federal Reserve meeting this evening, we do still have this strong momentum. So we've cleared the highs from February. We're now looking at the highs from November last year. As I said, the 150 mark is a key area of resistance because we know that Japanese officials target it as a key area of intervention to avoid further depreciation in the Japanese yen, which hurts domestic economy as a big importer of foreign products. So we seem to have cleared 150. We're now hovering around 150, 160. Now, 152 is probably a key area to target as well. The highs from November, 150, 190. So there is some room for resistance up ahead, but it looks like the momentum is firmly pointing higher. Looking at the RSI, we are nearing that overbought region, and over the past year or just under, we have seen the RSI always shying away from that 70 mark, or even just turning when hitting that 70 mark. So it may be the same scenario here. We may see potentially a little bit more follow through before this rally seems overextended and sellers come in. We did back here in June last year push beyond 70 before we saw a quick drop in the pair. So as I said, there is potentially a little bit of wiggle room in the immediate future. Federal Reserve meeting this evening likely to be the next catalyst. If we do see some weakness in the dollar on the back of the Federal Reserve meeting, whether it be because kind of the central bank negates the higher CPI reading, continues to focus on the disinflation process, or because Powell seems a little bit more dovish than expected, we could see a sell-off in the US dollar, and that could exacerbate the pullback as traders may focus more on the Bank of Japan action that happened early on in the week that potentially didn't get as much attention given the strength in the US dollar. So for now, short-term momentum continues to be on the upside, nearing some key areas of resistance. And of course, focus on this Federal Reserve meeting to see whether the momentum changes in the pair. That is it for today's review on the Bank of Japan meeting. Thank you so much for watching, and don't forget to subscribe to our channel.